Yeah, I'm getting hammered in the background here with network congestion, it says, but it's not saying why. It's very unusual. Let me just check my stream here. All right, I'm back to 5,800. I'm good. Okay, I'll watch this closely. I was hammered down to 100 megabytes per second here. So we're gonna try this again for you. There's something we gotta watch here. Okay, we're gonna look at two things here. The first thing we're gonna look at is on an hourly basis. I want you to be looking at this point right here. So just down here, just like this. Now this is traditional charting here. We're gonna get rid of this in a minute. But I want to kind of give you an idea of what's going on. So yesterday we have market being accumulated in here. Market being accumulated and short-dated hedging going on over here. Short-dated hedging going on over here. Fear of a significant drop. Much lower. 672 opening a door to 650. And uncertainty and volatility surrounding Epstein files and Iran. Mostly Iran. And yesterday, in the middle of the day, Trump kind of saved the market. He said, 10 more days. And he said 10 more days with not really knowing what the 10 days means. It's not like 10 days and we're going to start bombing. It was 10 days and we're going to have to do something bad. It wasn't bad. We have to do something about it. So next month. So the short-dated hedging goes out the window. Short-dated hedging goes out the window. We start squeezing up into OPEX, the upside OPEX pin. And what I really want to show you here is if we're not going to get that volatility until March, you got to start thinking about if it's not until March and you're parked right here, maybe in 10 days, you get new monthly flows for March in here. You're trading up into March OPEX and Vixpiration. So maybe you get one more sweep down here to go higher so they can jump on board. And you get a little bit more hedging activity, doom hedging that could drag us down. But I do want you to be aware in a higher time frame that into March, if nothing bad happens, we're targeting, 715 line right here. So this line right here, you need to break 672.87 to begin to trade lower. And we were not able to do that yesterday, the day before, this morning. None of that happened. We came back, though, and retested the weekly low right in here earlier this morning. We're going to draw that in right there for you. Put this on a 20. And you can see the response was what? Slam down, squeeze, right? So we are looking for a higher or a higher time or lower time frame here, a daily basis. So we went down here, we went all the way up here, and the buyers want to go where? They want to take out 692.19, 692.21, somewhere in there. They want to take this line out. Buyers want to take this out, smash this, because this will send them higher. On the bottom end, down below, we do not want to lose 684, 685. So we're going to draw this in here. We're going to draw this in here. Right in there. This would be your dip buy. Oh, wait a minute, wrong one. I want to write D right there. We want to write D right here. D right here. We want to know these if we're you want to know this if you're going up, you're coming, it opens the door to go back up. If you go down, you open the door to go lower. That's what the white lines mean. On a daily basis, the market's done everything it needs to do. It doesn't need to go any higher, though it'd be nice to go up here. I'm going to write D right here. We're going to go to a 4-hour basis. I'll give you some targets. Pull that back right there, excuse me. This one here is yellow. Taking that one out already. That being a magnet does not preclude going higher. If we have 6,900 options dying, they're worthless now, right? That would mean that we can go above this now, right? A little bit, even if we get dragged back down. We can go above 6,900. These are worthless now, these calls.